Welcome back to Explain the Charts, your go-to channel for comprehensive market insights. Today, August 14th, 2025, we are zeroing in on Meta Platforms, ticker Meta, which is currently trading around $783.02. The market is buzzing with excitement following Meta's Q2 earnings report, which significantly beat analyst expectations. This strong performance is largely attributed to the company's aggressive expansion of Meta AI, now available in over 200 countries, alongside substantial investments in AI infrastructure. Analysts generally maintain a moderate buy consensus on Meta, with an average 12-month price target around $822.41, suggesting further upside. However, it's not all sunshine. Ongoing legal challenges, including a lawsuit over scam advertisements and European antitrust charges, along with a delayed AI chatbot launch in Europe due to regulatory concerns, present potential headwinds. Now, let's switch to the charts to see how these fundamental developments translate into price action. Looking at the daily chart, we can observe the broader trend over the past year. Notice the sharp decline around late April 2024. This significant drop from around $500 to the low $400s was a major bearish reversal. Volume surged during this downturn, confirming strong selling pressure as market participants reacted to negative news or broader tech sector reevaluations. However, Meta quickly found support and began to consolidate before initiating a robust uptrend. Now, let's zoom into the period encompassing the recent Q2 earnings report to understand its profound impact. Here, focusing on late July 2025 on the daily chart, we can clearly see the massive bullish candle on July 31st. This candle, characterized by a substantial price gap up, is a direct visual representation of the strong post-earnings rally mentioned in the news. The stock essentially gapped up from a close around $695 on July 30th to opening above $775 on July 31st. This vertical move, accompanied by extremely high volume, demonstrates significant institutional and retail buying conviction. This dramatic shift underscores how positively the market received Meta's Q2 results and its AI advancements. Moving to the 1-hour chart, we get a closer look at the immediate aftermath of the earnings announcement and subsequent price movements. The sharp vertical climb witnessed in the daily chart is broken down into hourly increments here. After the initial spike, Meta entered a consolidation phase, trading largely between $760 and $780. We can see a strong retest of the $765 level as support in early August, which held firm, indicating buyer interest at that price. The stock then resumed its upward trajectory, pushing towards new all-time highs as recently as August 12th. Let's pinpoint the very recent price action on a more granular scale. On the 15-minute chart, we see the intraday volatility around the all-time high. On August 12th, Meta pushed aggressively, reaching highs close to $795.46 as mentioned in the news, before experiencing some profit-taking. The candle on August 12th at 13:21 Universal Time Coordinated shows a strong rejection from the absolute high, with price pulling back. This indicates that while there's strong buying interest, resistance emerged at these peak levels. Yesterday, August 13th, the stock saw a slight pullback, closing around $780.08, but today's news already indicates a slight recovery to $783.02. The $778 to $780 zone appears to be acting as immediate intraday support, suggesting a strong floor has formed after the recent run. Traders should watch the volume during these intraday pullbacks. Low volume on dips suggests healthy consolidation, while high volume could signal stronger selling pressure. So, let's recap the key points for Meta moving forward, back on the daily chart. Reasons to be bullish include continued strong Q2 earnings momentum, significant investments and expansion in AI, and a generally positive analyst outlook with an average price target of $822.41. The company is nearing a monumental $2 trillion market cap, which could attract even more institutional interest. For the short term, traders can consider buying dips around the immediate support of $778 to $780, with a stop-loss below $770. However, reasons to be cautious or bearish include ongoing regulatory challenges in Europe and lawsuits, which could impose fines or restrict operations. The general market sentiment regarding a rotation away from big tech could also introduce some selling pressure, even for strong performers like Meta. A breach below the critical support level of $765, the low of the post-earnings gap up, would be a strong bearish signal, potentially leading to a retest of the $735 to $740 former resistance turned support. Long-term, as long as Meta continues to execute on its AI strategy and revenue projections, the overall uptrend from the April 2024 lows remains intact. Should the stock consolidate above $780, a push towards the $795 all-time high and beyond, targeting the analyst high of $980, becomes increasingly likely, especially if positive AI news continues to emerge. Conversely, persistent negative regulatory news or a broader market downturn could see Meta retrace towards the $600 analyst low, though this scenario appears less likely given current momentum. Always keep an eye on breaking news and economic indicators, as they can quickly alter market sentiment.